Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of LME 3-month nickel, zinc and tin.
LME 3-month nickel. The most significant feature of this market in recent weeks has been and still is the very significant lows of 2021 at 15,665, which led to lows of late November 23 plus this year in January, February, and with some mild finessing lows of late July and early September in the 15,840 and 15,600 zone. It is at this point that I feel obliged once again to mention the big descending scallop pattern that I've been going on about for months now and what it may mean within the near-term universe. So the key level has been and still is the lows at 15,840. A significant move below this, and by that I mean you would know it when you see it, significant move below this would give a downside potential for the descending scallop pattern in the 13,830 zone. It still all comes down to what the market has done and even might still do with the 15,840 zone. Now, first time around, in late July, prices chose to bounce back upwards and during the start of August sustained the bounce. However, over mid-August, prices had an issue with testing the June 2021 low at 17,095, and I suspect indirectly the now flatlining long moving average currently at 17,365. This suspicion eventually evolved into a mid-July to early September ascending wedge pattern. Then, early 10 weeks ago, prices broke down through the base of the ascending wedge pattern, easily reaching the primary target, and close enough to the secondary target for me to choose not to designate it. However, the market then built up again, enough for me to draw a late July to mid-September bullish Andrews pitchfork, which held with some minor breaches until 3 weeks ago, when prices punched down through the lower time, currently at 17,020, and the nearby May 2021 low at 16,610. Below this was a fairly free area until we once again reached that key level, the 15,840 level, 2 weeks ago, when I said about this move lower, and I quote, "This move lower, should it continue, will bring to the fore once again the question I posed right at the beginning of this commentary and have done now for months, the future of a big descending scallop pattern," end of quote. As I've said earlier and many times before, a significant move below this, and by that you would know it when you see it, a significant break below this would give a potential downside for the descending scallop pattern in the 13,830 zone. I'm sorry for repeating myself, but it is actually important. Well, after the venture lower 2 weeks ago, prices pulled back up last week, but only to run up into the brick wall that is the combination of the slowly declining green short medium moving average currently at 16,650 and the mauve medium moving average currently 16,335, as well as the nearby May 2021 low at 16,610, and turned back down, eyeing once again the key 15,840 zone below. I am wondering how long these threats on the downside can carry on before finally prices give way. LME 3-month zinc. 11 weeks ago, prices drove higher, prompted by a small late July to mid-August reverse head and shoulders pattern. Up over the June 2021 low at 28.10, over the broken old dark blue upper time, currently at 28.63, the May to August 2023 bullish shift pitchfork that subsequently acted as an August 23 to April 24 upper bull channel line. Then over the short medium moving average, currently 30.01, the mauve medium moving average, currently 29.13, a congestion band between 29.58 to 29.65, quite narrow actually, containing the April 2019 high at 29.59 and the 50% Fibonacci line of the big old 2008-2022 move at 29.65. Plus further up the green middle time, currently 30.76 of the February to August bullish shift pitchfork, as well as over the July high at 30.22, followed by the neckline extension of the September to December 2022 reverse head and shoulders pattern, currently at 31.36, where the market finally slowed down and took a breather during early October and then again over late October, just shy of the June 2018 high at 32.20. I said of this move up 5 weeks ago, and I quote, "Prices have moved higher still to now test what I suppose is the holy grail of this market, the neckline of the September to December 2022 reverse head and shoulder pattern. This could become a seminal moment, so watch carefully," end of quote. Well, After what now looks like a double top over October, prices trended lower. Below the green middle time, currently at 30.76 of the February to August bullish shift pitch hook. This all went back to what I said 5 weeks ago, and I quote, "The question now is whether the market will falter here much as it did in late May, or will it really go for a higher price?" End of quote. Over the last 4 weeks, I had hoped to see, if not the answer, then the beginnings of the answer. But it's only last week, with the market beginning to tempt the short medium moving average and the congestion zone below between 29.58 to 29.65, that it finally looked like it may be on the cards. Indeed, my final words last week were from the week before, when I said, and I quote, "Keep a careful watch on the 29.40 zone below and what may or may not happen at and over the neckline above." End of quote. This week, today even, we have seen prices punch down through the 29.40 zone, only to halt at the mauve medium moving average. This is not a concluding move lower, but it is a step in the right direction. Thus, whilst I will not be able to label any targets below, I can indicate some potentials for a break below the October base double top. A primary move will be down to the 28.50 zone, with a secondary harder to reach move down to the 27.07 zone. Now, these are not as yet set, but with the action developing rapidly, it seemed appropriate to give some idea of what may happen once the break lower has been confirmed. LME 3-month tin. Between mid-July to mid-August, prices started their recent build higher, based down at the congestion between 28.835 to 29.005, containing the July 2011 high at 29.005, plus at the time, the highly important gold-highlighted, slowly rising long-moving average, currently 31.005. And back then, the nearby dark blue highlighted neckline extension for the October 23 to January 24 reverse head and shoulders bottom. That's currently at 28.535. And finally, the 50% Fibonacci line of the March 23 to April 2024 move down at the 27.330. All these slowed, stopped, and at the start of August, turned prices higher. The push back up then became stuck in what I can best describe as an accidental congestion area overhead, created by the combination of the medium moving average, currently 31.860, the short medium moving average, currently 31.890, the 50% Fibonacci line of the March 20 to March 22 move at 31.845, plus the bright red neckline of the thin and tall April-based head and shoulders pattern. Yes, that one, currently at 31.975. Prices were stuck there more or less until 8 weeks ago, when they broke higher, if temporarily, up over an earlier all-time high from April 2011 at 33.610, and up to the 50% Fibonacci line of the March to October 22 move, up at the 34.175 level. This was breached, but the market could not sustain the break any higher and turned and headed lower, though only as far as the gold highlighted slowly rising long moving average, the same one the market had bounded up from in late July and early August. Bounced up from, and also avoided in early September. Now, I said 3 weeks ago about this long moving average, and I quote, "This is a key level, and it asks the question of this market whether it will bounce up from it, as it did in late July and early August, as well as to a certain extent back in early September, or will it break it and test the late July-based congestion, roughly 28.835 to 29.005. There's a lot of overhang in this market, so if it does break, then it may reach down to the previously mentioned neckline extension for the October 23 to January 24 reverse head and shoulders pattern. However, we have not done so yet, so just watch carefully in case it does." End of quote. It's quite a long quote, but it's the end of quote. Since that time, the market shadowed the gold long moving average from above with one foray higher until today, when prices broke down through it with a vehemence, and punching down not only through the gold long moving average, but also the July 23 high at 32.05 and the next congestion at 29.880. This move lower has prompted me to look at the whole August to date action as a possible head and shoulders top pattern, with a purple neckline currently at 30.950. This is just below the gold long moving average. Now, This move lower, being just today, is not as yet confirmed, but because of the size of the break lower, I feel obliged to at least give some potentials for any move below the proposed head and shoulders top pattern. Thus, a primary potential will be down in the 29,030 zone, with a secondary, harder to reach potential down in the 27,170 zone. It's at this point I'd like to draw your attention to something I said 2 weeks ago about this market, and I quote, "There is another very recent pattern possibly developing, and that is the action over last week and the start of this week. Could be the flag part of a possible bear flag. If this comes about, and a true break below the gold long moving average would seemingly justify such a break, well, the downside could be measured anywhere between 29,500 down to 29,000, or even down to 28,250, end of quote. These numbers still stand, and I would continue to watch carefully how this break lower today develops."
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.